5%. Right?
Or lower.
Or lower. I'm excited. So guys, it's yours.
Floor is ours?
Yes, please.
Okay.
Sorry, can't hear you.
It was on, but now it's,
How about now?
I can hear you.
All right. Test 1 2 1 2. Good. All right.
Good.
Bryan Cohen, Juan Santana, home team, powered by Movement Mortgage. Vincent, thank you as always for bringing us to get in front of the agents, give them some knowledge of what's going on in the market. Good morning, young lady. How are you?
Good morning. How are you?
Fantastic. Thank
Nice
you.
to see you.
You as well. What we wanted to talk about today, because this is always the elephant in the room, interest rates. There is a program out there under Sony May that we have access to that Juan just locked a client of ours under 5%. That's a 30-year fixed, no points to get this interest rate and locked for 120 days. And then on top of that, they're getting 30 grand at the table towards closing.
30 grand.
30 grand towards closing. Interest rate 5%. It's a state of New York product. There's no cash. It's all about getting in front of the clients, figuring out how to structure their loan to make it fit the guidelines. Guys, there are always guidelines to all programs, whether it be jumbo, conventional, FHA, VA. There's always guidelines that we have to abide by, okay? Sony May's guidelines are a little tighter when it comes to debt to income ratio and income limits. And we'll share with you guys Sony May, the Express, to show you what the income limits are in the boroughs and in Long Island. So you guys have a little bit of a cheat sheet so you can identify what clients might fit into that program, okay? What Sony May is saying that they do not want the first-time home buyers to be on the outside looking in due to rising prices and rising interest rates. So if a client, we're at a cap of 44.99 on a Sony May debt to income ratio. Okay, if we have a client that's at a 47 or a 48 or a 52, we could run this program through the system to show Sony May if you buy down their rate from the 6% that you're offering today to 5.75, they might qualify. Oh, that doesn't work. Let's go to 5.5. This one in particular went under 5 for the qualification. Does that make sense to everybody? Because I want to explain it as many. I want everyone to really walk at it here, knowing this program to get back on the streets.
So we had a situation, I believe it was them, they did the qualification for the buyer, right?
Brandon, that's your buyer.
Yeah, that's my bad.
So we
It's right here.
we closed on a deal that we had you guys vet the buyer. And we just closed the other day and Ram came to me today, he was like, I took a look at the closing statement and something looked wrong.
Okay.
He was like, how much did they get charged in points?
18,000.
Right?
Yeah, for the points, and they have another loan origination fee, something 18,000, pretty similar, and their closing cost going $70,000 for $820,000 single family house.
Okay, with 70,000, that's impossible.
Well,
Yeah, I want to compare and Juan work that file, so I want to understand. This was the file. What interest rate did they close at?
I believe 5.37 FHA.
FHA.
Yeah.
5.37. Yeah, that sounds a little off. I want to confirm that when Juan comes in because that rate seems way too low on a FHA loan.
But they probably used the points to buy down.
You're not even at that level. Yeah, you couldn't even get to that point if you paid it to get to that, you know. So I want to confirm with Juan. Let's shelf this conversation for 5 minutes from now when Juan comes in, so I can give you facts of what's going on.
But the goal is we wanna make sure that the buyers have, a good experience, and at the end of the day, not get ripped off,
Oh, of course.
right?
Listen, remember this is not 2006 or 2007, guys. Buyers have to sign off on documentation before we get to the closing table. So any buyer that does come in, and here's Juan, I think he'll be able to clarify on this transaction. Juan, Ram was stating that on one of the deals that we closed with them, the buyer.
No, you haven't, that's not the deal we closed together.
No, that's not our deal.
That's
Oh,
some
good morning,
deal
buddy.
was Some other.
Oh, I apologize, I thought that was a deal that we closed together.
No,
Vincent
My-
and I just closed.
My apologies. My apologies.
And from the different lender,
correct.
Yeah,
so the closing cost was $70,000.
yeah, which is crazy, listen.
Small.
I wanna tell you what we do, which what I think is a little different than someone else, so a buyer isn't thrown a curveball at the closing table, okay? Juan and I will initially speak to the client to go over two main things. What their monthly payment is gonna be, and what their total out of cost is gonna be. That's down payments and closing costs. We are going to have a Zoom call with that client, an in-person with that client, or a phone call with that client. That is the first thing that we wanna make sure that we're all on the same page with, okay? Then throughout the process, that client, even though they're telling you that they might not have known, the banking department has set up so many triggers for them to have to sign to see the documentation prior to getting to closing. It's humanly impossible for them to not know what's going on. And if they were unhappy to have a conversation with their attorney or their loan officer prior to getting to the table. I didn't work this file with Ram, nor did Juan, so we can't get more exact than that. I apologize. But with us, there's always gonna be transparency. So I was getting into with the Sony A product, how great it is.
Oh, yeah, good morning, everybody. Yeah, so we've been talking about this product for the last few months. We finally got some people under contract. Hamlet's client is also doing the same type of program, yep. His client is different, their client makes a little bit more money, so they didn't take advantage of, they didn't get the lower rate, but they got the money, which is $30,000. And then Ron's client was able to secure, it's closing next week, the 21st. 4.875 30-year fixed conventional product.
So it's real, guys. We're not just blowing smoke here. This is real life. What's going on? How many more clients would like to come off of the fence or out of their rental into a purchase if they could secure an interest rate at that level? Be a lot, right? It would create a lot of motion for you guys, right? Motion creates action, right? Makes sense? A lot of phone calls. Like you guys have to be leaving here today, calling every buyer that you've spoken to in the last 18 months.
Yeah, I understand you 10 or 12 buyers, right?
Yeah, I know.
Yeah, please.
Ram, I'm not looking at you.
Yeah, please.
So Brian, can you do a recap so I write it down?
We could do a recap. What questions do you have?
The rate that you mentioned, the grant,
Mhm.
any particular qualification for the buyer?
Same thing, first time home buyer makes under 200,000 and is working. Anybody that's looking to buy, you have to just let them know you gotta double check.
And those 30K credit, do they put a lien on it or no?
Yep, they put a lien on it,
How many years do they have to?
to get fully forgiven, 10 years.
10 years, guys, but it's a sliding scale every year you pay.
So if the buyer buy the house with the grant, right?
Uh-huh.
He sells the house within a 5 years time.
He owes half.
Or he was, that's the, okay.
Every year you get a credit. Good question.
Make
Yeah,
sense?
good question.
Excellent.
It's actually every month you get a forgivable credit.
Oh, okay.
Every time you make a payment, it goes down.
Yeah.
That's the easiest way to look at it.
You make your payment on time, you get forgiven.
And then, does it have to be in a particular
New York State.
location? It doesn't matter the neighborhood, like that, because there's some, it doesn't.
Good question, Donna.
Every county has a different requirement for income. There
Okay.
are income limits and every county is different because every county people don't make the same amount of money. But it's all over New York State, there's no address restriction.
Does the income limit vary based on household size?
Correct.
Wow, that's the $1 million question. You just got through.
Because
That was a good one.
3 or more people.
okay, so it's
Can
when you
can
get
you
three
repeat the
people.
question?
What is it
People.
for one person?
1 person, 160, 170. It's not bad.
It's 128 the hour.
It's that, listen,
It's about a little bit higher, yeah.
Can you repeat what was the question?
Is there a household size for the income limit? Does the income limit change based on the household size?
And the answer is?
Yes. So the higher the household size, the higher the income limit. If you're a single person, there's two buckets. So these programs have 2 buckets. The lower interest rate has the lower income limit, the higher interest rate has the higher.
I have a question, but I don't even know how to formulate it. I think
no, talk it.
Oh, please.
Talk it out.
This is for first time home buyers.
Yes.
So what if a person already has a co-op and can they change the co-op to a LLC, whatever business? And then will the name be clean and just be there?
They have to wait 3 years.
I like the way you're thinking.
I like
We
it.
think that way as well, but unfortunately in this scenario, it won't pan out. But I appreciate where you bring, where it's going.
There is a way, actually. There is a way for everybody. If they put the co-op in the LLC or they don't. If they buy in a certain area. They do not have to be a first time homebuyer.
What if, okay, in the
Did it
Bronx?
also
No.
involve the fact that there's a certain distance between the 2 properties, like if you could say you're relocating for work at 100 miles away?
No, New York.
I know
Not
some
here.
programs have that guideline.
Correct, so yes, after a reasonable number of miles, they will wanna verify how you didn't commute to work. Whether it's hybrid, remote, et cetera.
You're onto something with what you're saying, it's just for probably all other loans except for this.
Right.
Where you could go from a co-op to a 1-family. Because of relocation.
Yeah.
Have a-
Yes,
So
Hi, how are you?
I already bought the house, right? So I wanna buy a house with FHA loan under my wife's name. Is that gonna work out or? No, that's curious.
Let me ask you-
You wanna buy a primary residence?
Yeah,
Sure.
why wouldn't it work out?
Yeah,
so because since I'm already a homeowner, so
oh. So you wanna buy a new primary residence?
new primary.
Under his wife's.
Yes.
Yeah, you could have up to 10 properties, right?
Correct.
But not as primaries. Your question, we're gonna have to talk to it at a different time.
No, I mean, you, as long as you're moving in with your wife, right?
As long as your wife isn't on the deed for the first property.
Is she on the first home, first
No,
house?
she's not in the loan.
No, you bought the house before you got married?
No, after that.
Alright, but you bought it by yourself, your house, your loan, your deed.
Correct, yeah.
Alright, you wanna move with your wife and your family to a new primary residence?
That's your wife.
And your wife's gonna take on the responsibility of the debt
Yeah.
this time, that's the agreement, right? You're married, you took on the first one, now it's your turn. Yeah, you can do that. I don't see why not.
Thank you.
Now, whether it qualifies is a different story, but it makes sense. Cause we have to look at the debt to income ratio. She doesn't have any debt on that property, so that makes sense. We're gonna have to, if you're not gonna want the loan, that makes sense, that's perfectly normal. Some people as well, I bought my first primary home with my wife's name. Right, the second primary home was both our names, and the third one just my name, they never questioned. But I sold each time, are you gonna sell or keep?
No, I'm gonna keep.
Alright, as long as it makes sense, it's not a problem. No issue with that,
Thank you.
it's a good idea,
Well, I was looking for it.
yeah, as long as you got ownership. What other questions, what other ideas you guys have? This guy's saving, your client's saving $800 a month.
Yeah, I saw that. That's extremely good for him. Because before, I think when you issued the pre-approval, he was just qualified for $670 or $60,000, right?
Yeah, so Ram is very special, I'm like, listen, we cannot go above 675. He comes back with a contract of 690, he goes, you can do it, Juan, you can do it, we can do it.
Make it happen.
Make it happen. You got this one, I don't want any disappointments.
Pretty
Right,
accurate.
and then he goes, and we need to close in 30 days, right, Juan? So I'm on the phone around, and I go around, we've been training for 12 months. Number one thing we talked about is expectation and communication, and nope, I said, okay, Ron, we're gonna give it our best. Now, I will tell you though, that when Ron told me that we need to close in 30 days, and as soon as I got it clear to close, was I all over you to close? Right? I was on you, right? Every 2 hours I called him. Because he put me on the pressure, so now he's on the pressure. He goes, but I'm not, I said, I don't know, you're the agent, get me my deal closed. The file is clear to close, your job now, you have, right? Think about it, right? If you guys are a real estate agent, your job is to broker a deal, right? Contract, right? You got a contract together between two parties, right? If it was a cash deal, whose job is it to get to the closing settle? Cause you wanna get paid, whose job is it? You, if it was a cash deal, right? You got a cash deal, you went to the attorney, you ordered title's clear, what do you say? All right, attorneys, make sure we schedule the closing right away, right? So think about this, when you get it clear to close, it becomes what?
Yeah, I was
A
thinking,
cash deal. And there's no more lending contingency, so I'm all over him, and the seller's like, oh, what's the rush? No, the rush is, the gentleman got a 4.875 rate. God forbid, if something happens, we need to close right now. We need to close,
Are there any points with that?
no point,
How long is it locked in?
4 months.
Question, if somebody wanted to do the low interest rate without the grant, was that possible?
No. It's a waterfall effect. They give you the money first to help you qualify. And then if the money doesn't help you, then they give you the lower rate. And that happened to his gentleman. Where we got him qualified for the same program, he's not getting the lower rate, but he's getting the money. Which he's very happy about because all he really cared about was the money first. He was always okay with the monthly payment. I didn't promise, I'm not gonna over promise and under deliver. Right? I read the same thing with his client. I never told him he might get a lower rate. I told him that this is the rate. And when he got the lower rate, he called me and said, please tell me this is a mistake, because I'm gonna go with the higher rate.
no, when I saw that rate, I saw that you guys are putting him under the FHA or something like that, I was like.
To this day, I told him, ignore it until you get to the closing date. I don't want to.
So, since you can get the money first and the interest rate later, I assume there's different qualifications for just the money and. then-
Correct, so this is what it's all about, the debt to income ratio, so those on Zoom probably can't see, but I'll give it a shot here. So basically, the max DTI is, your debt to income is 45% of your income. So I'll make it very simple. If you make $10,000 a month, your max payment is $4,500,
You know what that payment exists of?
right? So 100%, 45% of this?
That's taxes.
correct, your total pay and your debts, pity and your debts.
Principal, interest, tax, insurance, and whatever your minimal
Yeah.
liabilities on your credit cards.
So everything you carry a month, your Amex, your credit card, your student loans, car payments, everything plus the new mortgage payment cannot exceed $4,500 if you make $10,000. Right? So Mr. Romero, okay, the mortgage payment was higher, or whatever it was. His payment was probably, let's say, $5,300. Okay, so the grant agency, the state of New York said, well, he's over the threshold of 45 at the current rate of 6.125. Right? The New York State program said we're gonna lower the rate up to 2%, that as low as this rate to get them to this number. Okay, and they kept, there's a system that runs it, and the system spit out this rate. I said at this payment, he's good at the threshold.
That brought him to that 44,999,999, you know, right under, something like that.
Now, we're not waiting until the file's at the end of the file. And if this doesn't work, we just wasted 30 days of everybody's time. And the pre-approval process, I'm doing this scenario. Right, and to ensure that it works, and then we get the pre-approval from the grant agency right away. The final documentation is only given at the final rate at the end. Because they wanna make sure nothing changes, what if the gentleman got an increase in salary? Right, so the rate wouldn't be this, it would be higher. So it all depends, so that's how it works.
So what happens? And I assume, I mean, it's locked for 30 years, so I assume it won't change, but what if the person does get a salary, let's say 2 months out?
No, that's it. If you-
Once you close, you close.
Yeah.
It's not something
That's
you
a
check
good
on,
question.
it's like, oh, you went too much.
No,
out.
That's a good question, you get the lotto the next day, God bless. You know?
I don't think you'll care though.
No, no, the agency was not set up for post-closing, it was set up for origination.
Any other questions on? Have the list covered?
Yes.
Yes, you sure? Good.
So remember, you know, everybody's different, every client's different, if they're buying for the first time, the only thing that we ask, and we've been doing it for our clients here. Give us an opportunity to check, all we do is check. At least your clients know, you know what, this is what you can get in this market. Right, your client can know for confidence that working with you, you're checking every other option, not just the Google, the webpage online and saying, oh, that's my interest rate, that's my payment. Some people, you know how many people are on the cusp, right? They're like, I can't buy a house because I can't afford 4,200, but I can afford 3,900.
I speak to those people all day long. But what about the people who are looking in a certain pocket at 5.25 for a one family, but they can't find something, but they're able to go to the 550, 560. They have the world of opportunity.
That's what we did with here.
If we could figure something out here and get that lower rate, going to that 560 is gonna net them a cheaper payment than them buying at 525.
That's what we did with Ralph. And I felt bad for him because 2.5 years ago, he was getting a house at a similar rate because the rates were lower then. Yeah, and with a different agent, different attorney, I think same attorney, different agent, and it didn't work out. For some reason, they denied him, or the rates went up. He was in that period when the rates were low and they started increasing, and he didn't make enough money, and he lost the home. So this is a gentleman that was already disgruntled. He was already upset about the
He
process.
was set up at this
You know,
point.
so I had to be very careful to be very clear. Things could happen, right, any moment. But now he's happy, he's getting his home and he's back in. Hamlet's gentleman, very same thing. He was looking in Long Island. Once we found out he could park up from walk, right to the Bronx. And Hamlet's like, oh wow, we were looking in Long Island this whole time.
Yeah.
And now he's in the Bronx. And he was willing to change his location because there's different opportunities. And like Brian says, you can still have the same payment, right? So think about this, right? If the client's max payment is 4,500, right? With this program, your purchasing power goes up. You guys understand that?
Can you repeat that?
Your purchasing power. So 4,500 on 500,000 is based on a rate. Right? You can also get 4,500 with a different rate, with a different price. Does that make sense?
Yes.
What you guys follow?
Yeah.
Right? It's like a car payment, right, Hamlet?
Yes.
Right? So that car dealer's asking how much you want to pay. Because it's not about the car, it's about your payment.
Yeah.
You can get, you can pay 450 for a Hyundai, for a Accord, for a Mercedes, doesn't matter, right? So same thing with a house. What do you want to pay? 4,500, right? In today's market, that 4,500, the price of a home changes, not based on the payment. What does it change? The rate will determine the payment on the price of the home. So right now, based on current interest rates of 6.75, this payment's probably 550. But if this payment, if the interest rate was 4.5, right? That 4,500 is the same at what price? At 650 or 700.
They open up the world of opportunity for your buyers that they don't even realize.
So this same gentleman didn't qualify 690, he was qualifying at 600. Right? Now he got the home that he wanted because he got 100,000 more purchasing power because he got the lower rate.
It's a game changer, especially in the market that we're in today.
And that's what happened to us in the last 2 years. During COVID, rates were 3%. 3%. So somebody making 60,000, somebody's making $60,000. They were able to afford the same payment. Not anymore, right? Because at 3% at 500, the payment was cheaper. At 6% of 500, the payment is double, $1,000 more. So this is the beauty of these programs that we have to take advantage. And it opens up your creativity, your marketing, right? It opens up how to target, how to put your Google AdWords, how to get your marketing out there, how to target yourself, how to get more people involved. Come up with an event, a seminar.
Even with your listings, guys.
Your listings listed out there, you can put in your listing, speak to business, speak to your team leader, speak to your attorney. There's nothing wrong with putting a listing available, first time home buyer programs available. You know, purchasing power. There's
With
no
interest rates as low as this, speak to your attorney for the correct verbiage, but you could definitely promote that in MLS, 100%.
You know how many people you're gonna get more, you know?
Does it have a name, this program or no?
It's a Brian and Juan. It's a Juan Brian, no.
I'll send you the flyer.
Yes.
But you gotta keep the flyer this time, because somebody I wanna see everybody's folder. Let me see your marketing folders. Open it up. How many flyers you got in there? Exactly. I want you to create a marketing flyer folder today, and I want you to put every folder that I send you into that folder.
Okay.
So from now on, when you speak to buyers, you pull it up. Hold on, here's the flyer. Alright,
Good, she's in.
she's in.
Guys, any other questions about the market, what's going on?
What's up, Zoom people?
Can you guys send me a picture?
Yeah.
We're gonna get that out to you guys, yeah?
Right now, while we're doing this, if you email Sid, that email, he'll get it to you right now.
Thank you.
Another question, you said it's different by the county, is there a way to get?
Absolutely.
The limits on
Yeah.
per county?
100%. I'm gonna send you before you leave, give me information, and I'll send you the link. You can always save that link, it's a website, just click on it, boom.
Yeah, all public information.
Yeah, it's public information.
Yeah, I just don't know where to.
Yeah, we'll get that
What
to
you
you.
guys are looking at.
Yeah,
Guys,
and listen, anytime it goes over the income limit, I'm sorry,
No,
anytime it goes over the income limit, 5,000, 10,000, don't just assume no, that's when you wanna give us a call. Hey, they're right there,
There are exceptions to be granted in certain situations.
you might be looking at income that's different way we look at income.
Right.
You might say, oh, with the bonus, they got 220. But the New York State's gonna say, well, the bonus is only one time, they don't count it, so you follow? Like a lot of police officers, this is very important, it's a good point, right? A lot of police officers got retro pay last year. In the summer, 40,000, 50,000, 20,000, 30,000, because they got the new contract, right? All their income was high, one guy was up over 200,000. Guess what, they don't count that towards the income he was able to qualify for this program. It's a one-time retro pay.
This program's ideal for your city workers. It
Nurses.
doesn't get more ideal than for your city workers.
Medical staff and city
Your
workers,
sanitation, your electricians, your DOT, your DEP, your
FDNY,
every one of them.
nurses, LPNs, I mean, literally every hospital network, anybody you know in HR, anybody in network. You say, listen, I got a beautiful program that you can offer to your entire staff, to your floor, everything. Contact me. That's out there, people just don't know about it. Yeah, there's a way for you to track things, and then you know what else too? When you're a listing side, right, like Cameron was here, you're listing something, this is a beautiful product to offer your sellers to say why they should list with you. Because you're opening up the pool of purchasers because of these programs. Now you're gonna be able to get more people to view the home because of.
That's gonna create a lot more net to your seller, right? The more people that see it, the more people that like it, the higher that offer that's gonna get accepted. And that's your value add that the other 10 realtors didn't bring in before you sat down with them.
All right, anything over $1 million, not everybody can qualify, right? You have to be a strong buyer, 20, 10% down, 20, good income. But if you have someone that you can offer that this listing, you have lenders that offer this, you're gonna be able to attract more buyers.
Guys in the Zoom world, any questions?
I got one, buddy, old pal.
What's up, my old friend?
Oh, do you have any flyer or promotion about that essential worker thing that we could use? Because I did an open house and it was bananas, and majority of the people were doctors, you
Yeah.
know, and I think that would be a good tool. I mean, sadly, I sold it in an hour, but a lot of people only had credit pre-approvals or wanted to get pre-approved after they saw the home, and they all missed out on it. But I think this would be a good tool to catch up with them and let them know so they don't miss out on the next good thing.
Definitely could get that over to you, no problem.
We can do that for you, absolutely.
Even piggyback on that email that we have with Sam Cristobal and just requested, he'll send it over to you. Cause I won't be in the office
Yeah.
until the morning.
Yeah, again, a PDF is fine. I'll just I'm
Yeah.
gonna send it to him now.
He'll send it right over to you. Anything else to add?
What's the today's interest rate? Just curious.
One size doesn't fit all, like suit jackets.
No, just market rate.
There's no, in my world, you know me by now, I'm never gonna say that. Perfect scenario, non-Sony May, you're gonna be in the mid to high sixes.
Yeah, he's right, let me see, you're right, Brian, let me see what it came out today. Cause it already went up this morning. This morning was high sixes,
We're on 7 now.
6.7, yeah, we're probably back into 7, because this morning was 6.7, but inflation came in double, yes, in last month.
So.
Yeah.
So the 10 years already rocking right now.
Question
Well,
about
4.3 already.
appraisals that come in low
Yeah,
Yes,
and how you could use PMI instead of bringing money to the table.
for someone who's traditionally doing 20% down.
Correct.
You always have that option depending on qualification, where you could change a 30% down payment or a 20% down payment to a 10% down payment or 5% down payment to offset that the client's not gonna have to come to the table with more cash in hand. So that is an option that happens all the time. It's always an option that we bring up. And then there's a lot of pre-approvals that are on the streets right now that are showing you 30, 40, 50% down when they're really only 5% down buyers anyway. So be careful when you're dealing with what you might think there will be an appraisal issue, right? You're the licensed realtors. You're the first ones. You know the market more than anyone. You have to run those comps prior to going into contracts and make us aware and make your client aware. So we have game plan A, B, and C if that appraisal comes in short.
So what is necessary for them, like, and how much money is PMI insurance versus how much money they would have to bring to the table?
All depend. If you are $100 million purchase, you're doing 20% down, 200,000, right? No PMI. Anything below the 200,000, you're gonna have PMI. The higher of the loan to value ratio, the higher of the PMI, and longer that it will last. And credit score is a huge factor in that. If you are 20% down, but the appraised value is only 15 grand difference, and now you're leaving 19% down, the PMI is gonna be minimal.
Minimal, few $100.
Not even, minimal. So it's all dependent again on the scenario. There's no exact science, but know that the closer to 20% down you are, the lower the PMI is.
So usually it's a cheaper option
Correct.
than bringing money to the table.
Oh, without a doubt,
As long
cash
as
is
you
hand.
qualify, and if there's appreciation in the house, then you could be out of.
Then you can
PMI.
always request and call the servicing company and say, hey, guys, I want an independent appraisal done. I believe I'm on that 80% loan to value, and then it can get dropped automatically. On a conventional loan, you don't have to necessarily refinance.
And also get a second appraisal.
So, and as a realtor, if you guys know that, then you monitor the comps. You have a few comps that close that show an increase in value, you can get them out of pay that PMI.
And guys, something that we always have in the back pocket, and if you're in a real jam, I could reach out to an appraiser directly that's on the bank list and understand what the value is more or less gonna come out at. Please, they're not gonna be 100% accurate every time, but they're gonna be 95% accurate to give you what's going on in that market so you can advise your client. It's all about communication. We advise the client from day one. If the deal works out this way, it's gonna go this way. If it works out this way, we have a plan for it. If it happens to go that way, we have the third option. So as long as they're aware, your client will never be unhappy with you. Just have to educate them.
You said that if it's already a conventional loan, they don't have to refinance once the property increase value,
They could call their servicing company and request
an appraisal,
an appraisal.
and then.
Cancel PMI.
Or it will automatically come off after the 60th payment on a conventional loan.
60th?
60th, 5 years.
Or 78% off.
In New York, thankfully, the way we've been going over the last 15 years, it's gone off a lot quicker than the 5 years, So other parts of the country, no, but here we're in a lucky situation.
So a lot of the agents don't know that that's an option.
Of course.
You think the only option is, hey, renegotiate the price or come to the table with a bigger down payment.
No, there's always that third option.
If there's a big down payment, there's always a way to fix it. Like you said, you can do another appraisal, you can try, try everything first before it impacting the client. But if the client only has 3% down, that's where it can get a little sticky. Right? You have to understand the deal. If the realtor comes in with a 3% or 3.5% down and the file short, you're gonna have to renegotiate if the client doesn't have any more money.
Yeah, guys, if
But
you're
the client does have 10-20% down, yeah, you can always figure it out.
it's a common sense thing, right? We're at 500,000 list price, and that thing's going into contract for 580,000. and the client you're accepting the offer on has 3% down, you're most likely gonna fall into a situation. Right? But if you're getting in 500,000, 580 contract price, but that person got 30-40% down, there's always a way to figure it out. And communicate, let us know what's going on so we can help. We don't care if it's your first year or your 10th year, we have advice to give you to the client, can help you paint the right picture for them and what they're getting involved in. Make sense?
So I've seen that situation recently where,
It's gonna happen more and more.
where the listing agent accepted an offer with the seller's concession and a very low down payment, and we're like, there's no way this thing's gonna appraise. So what are they going to run into come appraisal time?
In a low down payment option and a seller's concession, I like to verify that my client does have the money for the closing costs. They could pull it from somewhere, they don't want to, they prefer to hold that 401k intact, not borrow from mom and dad, or just keep the money because they want to paint new refrigerator, new floors, right? So I always think cash is king, so I think concessions are great in the right scenario, right?
Push comes to shove, we wanna make sure they have the money.
You wanna make sure they have the money, that God forbid the concession gets taken out.
Mhm.
Because then what you do, everyone just wasted a whole bunch of time.
Yeah.
Whole bunch of time. So I always double check that money, or at least half of it, like, we have some other cash to offset if the appraisal is short. And then on top of that, my cherry on the top, I'll reach out to the local appraiser in that situation to know from day one where we are. Guys, thank you for your time as always. You want to announce the event tonight, if anybody grab last minute, okay?
Yeah, we have, there's an event from an organization called Speeda tonight. It's called Triumph and Succeed, to thrive, and how to take advantage of this market, how to succeed and thrive in this market. They're gonna have a panel of speakers, brokers, top producers. They have a keynote speaker who consistently closes $50 million a year or more. This is not like people that are on TV or anything of the sort. This is a local, real top producers that work here in the 5 boroughs that are really doing what they're doing. Just to hear different conversation.
Correct.
The tickets are affordable.
You know?
They're available. I believe there might be some few seats left. I don't know if it's sold out yet.
When I looked this morning, there was a couple still.
Yeah,
So
and there's gonna be dinner and everything included, so from 5:30 to 8:30 and networking as well.
And how much are tickets?
I believe they're starting only at $40. Yeah, if you're a member, the membership is $77 a year. If you're not a member, I think it's like $77 for the event or $65 for the event. But it's a 4-hour event, networking, food and everything included, so.
and it's right here in Queens, guys.
Yes, Marbella Restaurant, what area is
Yeah.
that?
Marbella?
Yeah. That's over here, what is that, Northern Boulevard, is that Flushing still?
Bayside.
Bayside.
Bayside, yeah, it's right here,
Yeah.
yeah, 20 minutes.
I'll be there.
Perfect.
Hope to see you guys tonight, if not next week or the week after. Thank you for your time.